Let's move on to the M&A or proposed M&A.
Right, well, Tesco, one of the UK's biggest grocers, that's ticker TSCO here in London, trading around 185.5p, has chosen MBK as the preferred bidder for its South Korean unit, unit Home Plus, put my teeth in, but it didn't specify the terms of the MBK offer. Nonetheless, sources close to the bidding process have suggested that Tesco received 3 bids in the region of around £3.8 to £3.9 billion, or 7 trillion Korean won. But MBK's won the day. KKR and Carlyle Group were 2 of the other big names in the hunt for the Tesco South Korean unit. If the sale is completed, of course, it will mark the first major disposal for Tesco since its credit rating was cut to junk by
That was a bit harsh, wasn't it?
Well, it was, yes, really, for a business that's such a cash-generative one, but that was a big slap on the wrist, I suppose, over the accounting scandals. But S&P and Moody's
probably closer, but if I remember rightly, was the 3.86 billion is like half of what the market was calling.
I don't know that. Yes, I think it's not any kind of.
It's not a good figure, is it?
No, it's not. But I think it's that's what the PE bidders were prepared to pay. So that's really all Tesco could do, as it needs to get out of these kind of operations, is to accept that. MBK, just for a bit of background, is based in Seoul, so it's a Korean business. It's actually one of Asia's largest PE firms, and in this deal, it's been backed by Temasek, the Singaporean government investment fund, and the South Korean National Pension Scheme.
Names.
So, yeah, I mean, yeah, plenty of firepower behind it, but it obviously hasn't felt it needed to overpay to secure this business. If indeed it does, but so it's hard to see why.
I might because I just remember at the time 7-8 billion was the potential sale price there. So I'll check my homework. But
yeah, well, let's
from memory, it's well, maybe that's why the share price is not
flying away.